Hey everybody, it's Pete. Good morning. It's Friday morning, October 30th, 2020, the last trading day of the month. I think that for me personally and for the community, very happy to see this month and getting more towards the election out of the way. We keep talking about indecision is absolutely what the market does not like. Uncertainty is not what the market likes. Double negatives there. So that's actually forced us to be trading in a much tighter window right now. So just to be clear, personally, I'm scaling back my size quite a bit until after the election. I'm not holding as many overnights and certainly not that many overnights with any kind of size right now. It's just smart trading. I understand we all want to be traders, but part of being a trader is managing risk and accepting risk when opportunity and probability is at its highest. And right now we have pretty much the opposite of that. So I kind of feel like right now that very tight short window is specifically day trading right now, where we can control when we get involved, which we can also do as a swing trader, but we can't do anything about swing trading and these overnight gaps, which are confusing and frustrating quite a bit of traders right now, which is, again, one of the biggest things I'm talking about in the boot camp right now is I am not and haven't been carrying overnights. I have not been carrying into earnings. I'm scaling back and making cash flow on intraday trades until this election is over. Hopefully, right after the election, we have some news on a stimulus package, which would give us a nice bullish boost. So there are a few trades here today coming into October. If you remember back very at the beginning of the month, we said the odds were incredibly good that this month was going to be what we call an inside month or a consolidation month. And that's exactly what we got. I mean, August was straight up, September was straight down, and this month was kind of like right smack in the middle, but there was more than just price action. There was more than just earnings. Quite a few companies reported good earnings, but the overhang, the black cloud of the pandemic right now has everything in a tizzy. On top of that, we have the election. So once this next week is out of the way, at least we will have some clarity, hopefully next week, on the results of the election. The government can start to get to negotiating again, get that stimulus package back on the table. And even if the pandemic persists, at least we can have some economic aid, which would strongly boost some of these stocks. So we're going to first take a look at the SPY. Then we're going to work our way into some individual stocks that could be swing trades right now. Believe it or not, I have one stock that is my favorite play of the day today. Very easy setup to participate in. It is actually going to set up a swing trade for me, but one of the few that will. So we're going to head on over to the charts and take a look at which stock we're talking about. But first, we're actually going to take a look at the market. So here's what we're talking about in the market. We had an explosion in August. We had a monster reversal in September, which we knew was going to lead to a consolidation month. Now, the good thing about consolidations is they're a little bit frustrating to trade because the volatility contracts, but when they break, you come out of that, you get really good volatility, and that's what we want as short-term traders is action that's tradable, right? So we're going to head up back over to the daily chart and look at the one stock that tops my list today, which is Hog. Hog had really good news, had a bullish gap, has now held the bullish gap for 2 days. I am looking to get long Hog today at 34.50. So that is my new trade in Hog today. It's a very simple play, not an expensive stock. A lot of people are always saying some of the stocks are too expensive. That's not really expensive at all, and neither is the new one that we're going to be taking a look at. Yesterday, NEO broke out again, finally cleared the 29 level. I am looking to be long the stock. The profit target was 40, though. Be careful with this, that as you start to move closer to the profit target, you start to diminish the reward potential for the risk that you have to take. So I am still looking to be long. However, because yesterday was a relatively wide trading range, you need to now make a decision, 40 being the target, 28.50 is the stop loss. So you're really going to be looking at risking $4.50. I would significantly reduce my share size on my initial entry because of the size. That's the proper stop loss in order to put this trade on to hold it up to 40. Now, if you want to get a little bit fancy and you're in front of your screen during the day, you would wait for the market to open today, which looks like the stock's going to open lower with the rest of the market right now. The futures are actually down 32 and getting worse right now. You would look for the stock to open, wait for the opening range, trade the opening range breakout to the upside, and then yesterday's low would be a stop loss. So you're actually tightening the stop loss a little bit there. Tupperware is another one that actually just traded really, really well again yesterday. So here's the deal with Tupperware. I am not looking to initiate a new swing trade in Tupperware. It's up over 30% in 2 days. I will be day trading it though, because of how far and how fast it's moved in a couple of days. We've seen this in quite a few stocks that have had either good earnings or good news. The stock spikes, it's good for 4 days and then rolls over, and then you get caught on the other side. So we're only looking to day trade this stock today as long as the volume is good and it meets certain criteria. PDT, on the surface, it looks like it's a good breakout, but really 92.50 to 97.50 is the level. So I'm going to be watching this. The reason I like this is that it keeps getting up to this level. You can see it got to 97.50 again. So I'm looking for the stock to be well bid over 97.50 before I start to look for a new trade there. So we're really setting up the watch list for better ideas. Same thing here with JD. 84 is the level. So no trade today. We're setting it up, hoping today goes well bid, higher highs, higher lows, and closes near the high above 84, setting up a trade for Monday. The big tech stocks, obviously Twitter is, believe it or not, the big one that's in play today. I will be actively trading this stock today, both long and short, depending on how it unfolds. They had increased expenses and decreased ad spend, meaning ad spend revenue, which is the opposite of what you would like to see. So this is going to get some bearish price action today. We're going to be looking to actively day trade this stock today, as well as Apple, the other big tech stocks that actually did report good earnings, did have good numbers. Facebook, Google, and Amazon. So there's going to be a lot of activity. Pick one of those stocks or 2 or 3 of them, depending on what's in your trading account and how much you can trade. I will be watching Twitter today. I will be watching NIO. I will be watching Tupperware, and I will be watching Hog. And again, I'm being responsible based on the experience that I have. I'm not taking any big overnight risk. A lot of the traders that I know right now are doing the same. Some traders aren't even coming back until Wednesday after the election. So you have to make that decision for yourself personally. I'm telling you what I'm doing from an experience perspective. I'm not allowing myself to be at the whim of these overnight gaps and the good news one day, bad news next day, and that kind of stuff. So I'm day trading right now, but setting up some trades for next week if and when the market actually becomes clear. One stock I do want to mention from yesterday that was just something that we mentioned pre-market that's very important, and it has to do with how long has the smart money been buying a stock. The longer you can see clarity, the more conviction you can have in that trade. And we were watching OSTK yesterday in our game plan meeting, and somebody had mentioned that it was up 10% and they're looking to buy it today. They said, whoa, the stock hasn't, zero order flow, hasn't done anything for a few months other than sell or go sideways. Be careful with having conviction on a trade where it's only one day. And in this case, it was only pre-market, and let it set up and give you opportunities after it confirms, after you get feedback from the market. And in case you're not day trading, this is what the stock looked like yesterday. And we kept analyzing and reading the tape. We kept saying, nope. So we stayed away from it despite this monster gap to the upside. So that's really where tape reading separates itself from chart reading. When you get in there and you have specific parameters of when you should or shouldn't put on a trade, how high the expectation is for follow through or how low it is, and you pull yourself back versus when you should be in there and be aggressive. OSTK is a great example yesterday. The smart money has not been buying the stock, so you didn't have any reason to have conviction. There was no previous bullish order flow that you would expect follow through, like we've seen in some of these stocks that have had good earnings and bullish order flow prior to the earnings that have followed through. I think most specifically Target and CRM, probably the 2 biggest that fit that category, where they gapped and just were amazing day trades that day. So that's really that's chart reading versus tape reading, reading the news versus tape reading. Tape reading is you keep putting the pieces together, and that's what separates somebody from who was trying to buy that stock all day yesterday on the way down to our community where we weren't doing anything because it didn't meet the criteria to get involved. So we saved the money. Kind of the same thing that we're doing in the solar stocks. They're not the same. The tape has changed, so we're trading them differently. Again, you can't trade the same way that you did a month ago unless the conditions are the same. And if the conditions have changed, then you have to change how you're trading. You're not changing your strategy. You're changing how you're allocating money to that strategy. Sometimes it's less, sometimes you're staying on the sidelines, but that's what makes somebody a profitable trader, because you're understanding how to do that and when to do that. So if you have any questions, definitely leave a comment below, subscribe to the channel. I'd appreciate it. And absolutely sign up for the boot camp. If you want to have an amazing November and December, invest in yourself now. I'd love to see you on the other side. Have a great day, everybody.